following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block with your hosts, Mark Longo from theoptionsinsider.com. Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
All right, and welcome to the Option Block. And there's a lot of stuff going on today that we want to get to, but first we have to introduce our cast of characters, our regular crew, our usual suspects, if you will. Starting off, we're going to mix it up today. We're going to start off with Rob Kurzakowski from Options Express. Rob, how are you doing today?
I'm doing great. How are you, Mark?
Not too bad. How was your New Year's? Good?
It was good. It was, we actually have to spend it downtown and get the kids with my parents for a day.
Nice.
Oh, good man. You dumped off the kids.
You know what that means? That means, a seedy nightclub and a pound of cocaine, right?
You just don't know what to say. You just don't know what to say when Sebastian chimes in.
No, you don't.
Welcome back to the show, Rob. That's as good a welcome as any, I suppose. And then that other tinny voice chiming in about the cocaine, as usual. One of his favorite topics is, of course, Mark, pound of cocaine. Sebastian, how are you doing, Mark?
I'm doing well. I rode in from downtown on my white horse, and I am ready to party. Yeah, it was funny. I made a joke. I made a joke over the Christmas holidays, similar, about my wife and I splitting an 8-ball for over New Year's Eve, and my dad was had no idea what that was, and then B, became convinced that I actually was doing that over New Year's Eve. And the fact is that, I couldn't handle an 8-ball if I wanted to. So
let's just clarify that for the listeners now. Maybe that'll be our soundbite for the week there, Sebastian. And finally, rounding out the crew is our anchor, The Rock, Uncle Mike Tusaw himself from Know Your Options, Inc. Uncle Mike, how are you doing today?
Doing well. Just call me Mike. Hugs are better than drugs, Tusaw, or Mike. Who needs cocaine when you have option trading, Tusaw?
I like the first one better.
All right, and with that, we will dive right into the trading block.
The trading block.
And it was another relatively calm day on the street today. The markets finished S&P down about 3 handles, Dow down about 25 points, NASDAQ up about 7.5, and the VIX cash up 0.38 points to close at 1740. We had a bit of a range. The markets were up, it was down, it was up, but nothing too substantial throughout the day. A lot of the kind of vacillations we've been seeing lately. Seemed like some of the big movers today was Geithner running off at the mouth about the debt ceiling and how we're going to hit it faster than usual this year, maybe by the end of March, which is fantastic. So he wants Congress to, of course, allow us to borrow even more. I guess depending on which side of the aisle you fall on or which side of the economic aisle you fall on is how you view that. We've also talked a lot about what's been going on with the Consumer Electronics Show. And so far, it's been a bit of a bust. I was hoping for more movement in some of these tech stocks. I think a lot of the announcements leaked early. The Motorola tablet was announced a couple of weeks ago. The Verizon stuff hasn't materialized. Of course, there's still a rumor that Verizon might announce something today. So if Apple takes off to the races, it's because they finally announced the Verizon iPhone.
Oh, yeah. I actually wrote a piece on that for the Street.com that got published yesterday, believe it or not. So
about the Verizon iPhone?
Well, it was a little bit more of a bear play on AT&T than it was a Verizon iPhone. So,
well, actually,
I don't know where you. Oh, sorry. What were you saying there, Rob?
Actually, I think that AT&T had a pretty nice announcement with they're actually diving into the 4G arena finally. We've been talking about the LTE network for a long time. For Verizon, they've had SIM cards that have been kind of leaked and pictures floating around the internet for a while now. But AT&T has been very quiet, and that was kind of the only bombshell we've really seen from the CES. That and NVIDIA is really rocking today.
Yep.
It seems like everybody that's making tablets is going to be using their dual core Tegra 2 chips. Samsung was rumored to buy quite a few of them, and we've also seen the Motorola tablets going to run on a Tegra 2 and some of the other phones.
There's some big rumors about NVIDIA being scooped up by a bigger fish sometime in the near future.
They've been talking about that for a long time.
It's bound to happen at some point.
Yeah. Their rival got bought out. ATI is their big rival. They got bought out by AMD a couple of years ago. So everyone's been waiting for the other shoe to drop and for probably Intel to come in and scoop up NVIDIA.
Yeah.
Of course, today you're right, Rob. NVIDIA was a little bit off to the races today. They're probably the only big mover so far on the announcements out of CES. They're up about 14% to 1933. And people tend to overlook the component manufacturers a lot. They think of, the headline making stuff like the new tablets and things like that, but they forget that what goes into those tablets, like the glass, like the screens, the LCDs, and of course the processors. So, and I haven't seen anything else like, Palm announcing the Pre and taking off to the races or anything. No big bombshells like that yet anyway.
Yeah, we've seen some other ones that are kind of smaller movers. Corning, their Gorilla Glass is used in a lot of the mobile phones, and also Motorola Mobility. They actually announced a pretty impressive phone. They haven't had a new phone since this summer, so it's something to. There weren't actually, despite all the rumors about the tablets, there wasn't much floating around about actual phones, and they actually unveiled a pretty impressive phone. I think it's so that kind of did spur some buying action in Motorola Mobility.
Yeah, a little bit. It was up about 2.5% today. And by the way, I've had the damnest time on all my platforms entering those symbols, MMI and MSI. For some reason, they don't want to let me add them, especially LiveVol. LiveVol just keeps spitting it back in my face for whatever reason. But yeah, other than that, your commodities, Tusaw and Rob, continued the sell-off today. Not looking too good for all you silver and metals bulls. So why don't you give us a quick commodity rundown of what happened out there today?
I think we're just seeing a continuation. Some of the metal buying is just kind of run out of steam. With some of the metal ETFs kind of pulling back a little bit. The metal ETFs have almost created a self-fulfilling prophecy with creating demand for the actual physical metal. Now that we've seen some of those holdings, or some of the holdings of the metal ETFs pull back a little bit, we're seeing just kind of subdued buying. I think we're seeing some of the selling that we expected before year end. They just waited until the second day of the trading year to finally start taking those profits, and it really kind of had a ripple effect across a lot of commodity markets. So a lot of people getting squeezed out because of margin calls of other commodities. And with some of the economic concerns in Europe, the ECB has been talking bank bailouts the last few days, and I think that has some traders concerned about the prospect of long-term growth. So yeah, we're just seeing a market that's kind of run out of steam, and the profit taking actually happening just after the new year instead of right before, like many were expecting.
Yeah, I have to tell you, I mean, I'm as big of a commodity bull as anybody, and I have to be honest, I'm kind of surprised it took this long to happen. I think in time I'm still the commodity bull, but nonetheless, you're going to have corrections in any bull market. Nothing goes straight up. So I think we're just going through a correction right now.
What do you think, Mike? Is it time for listeners to start eyeing some of those downside puts in, let's say, SLV?
Well, I mean, we're still short puts right now. The way with which we're playing silver, we missed a lot of the upside rally in silver due to the fact that we were collared, but we're still, for a lot of our clients, we're still short the 25 puts right now, and with that, if it goes down to that level, we'll reinitiate a collar. We'll let it get put to us and reinitiate a collar. So I think it's still, I wouldn't get into the stock altogether right now, or I'm sorry, get into silver right now at this level. No way. But I think it could be a good time to start selling some puts as a way of as a way of creating a position.
So that's going to close out the trading block, and we'll move right into the odd block.
The Odd Block.
All right, and welcome to the Odd Block. This is the section of the show where we discuss some of the interesting and or unusual options activity that's coming across the tape today. We're going to start off. Today's Odd Block is going to be primarily some size activity going on. We're going to start it off with Time Warner Inc. TWX. They closed out at 33.27 up a dime. And this is the name that does usually about 5,000 contracts or so a day. Today they did over 63,000.
That's unbelievable.
A big surge in Time Warner options. And the bulk of this was a big delta neutral trade. Trader came in and he dumped 1.4 million shares of the underlying at $33, and then he bought 40,000 of the Feb 34s for 56 cents. So if you do your math, he did that on a 35 delta. And we've talked before about the value of these delta neutral trades, and they give you, it's not a straddle per se, but it gives you upside and downside potential as long as you have some significant moves in either direction. If it just hangs around here, it's not going to be a huge lift for him.
I think that this is my bet. If you look at where Time Warner stock has been, it's had a nice little run up here. And I think that this was actually a stock replacement strategy based on what I would look at. The guy gets in, buys Time Warner for below. You could buy Time Warner in as early as, wow, look at that. That's unbelievable. As early as, beginning of November, you could buy Time Warner for $29.50. Guy rides the stock up to $33, unloads a chunk of his stock, but still thinks the stock is going higher, so he buys the calls in a delta neutral trade. He's actually going to do better if the stock runs up, but he's not going to be sad if the stock falls. That was my interpretation of what was going on, is that this guy really was doing this against an existing position. Obviously, I could be wrong, but
do you think he's just rolling up again?
Yeah, I think he's unwinding calls. He's unwinding stock and replacing the stock with calls. And what that does is allows him to take advantage of upside while not losing, while not getting burned on the downside if he, just hangs on the stock. I'm sure, Mike, as a financial advisor, you've seen clients against your better recommendation hold on to a stock that's run all the way up, only to have it run all the way back down on them. This way, this guy takes advantage of the upside without probably losing as much on the downside. He loses the 60 cents that he paid. So
right. It's kind of like as the stock runs up, then you buy a put against it. It's kind of like a different version of that in a much more complex setting.
Mm-hmm.
It's interesting. You don't normally see that delta neutral, but it makes sense if you have a size amount of stock to dump. You're not going to get it off at a decent price. If you can find someone to take the other side of that, and then you just tie it all up and have the brokerage house set it all up for you and maybe take down a piece of it, that's probably the easier way to go than trying to unload the stock lake first and then work the calls. Especially that's 40,000. That's a sizable amount of calls to put up. Yeah, that's an interesting theory. I like that. You don't normally see people rolling with calls on a delta neutral like this, so it's kind of interesting. Time Warner has had quite a run. The last time they moved up this high around $34 was back in May. So they're
and it's you know what it did. What it did last time it got up this high, it sold off pretty quick, and I'm sure this guy is seeing that and doesn't. It got up to around 33 end of June. It got up to around 33 in May before the flash crash. Obviously, you can't really count that, but this is near last time it got up to, and then like a year ago in 2009 it got up there as well. And same thing, it's sold off at 33 every time. So I just look at it from, I try and think to myself, well, if I was the customer, why would I buy some cheap upside calls and do it delta neutral? And the only thing that comes to mind is this guy is dumping some of his stock.
Nice to see a large option trade going up like this that isn't a div play.
I know, it is.
It's an actual legitimate trade.
It's not 9,000 Verizon calls trade, 90,000 Verizon calls trading back and forth for no reason. Yeah, I know.
All right, and then the next name on the odd block is KBE. It's Spider ETF for the KBW Bank Index, and try saying that 5 times fast. This one is a name that does another one similar to the last one, does about 5,000 contracts a day. They did over 70,000 today, and they closed at 26.48, down 33 cents. And we saw a lot of size coming in March in this one, a ton of size actually. And this is actually similar to what Mark speculated on the last trade. This is a guy rolling his winners. And so we saw a trader come in, and it looks like this guy actually originally came in back in early December 13th and December 8th, and he picked up 27,100 calls on the March 26th strike total. Picked up 20,000 of them for $1.07 on December 13th. He bought 7,100 of them again for 70 cents on the 8th. Today he rolled those out, and he sold the bulk of them, of the March 26s, for $1.60, so a nice little profit there. Sold the other 7,100 for $1.75. So yeah, that's about $1.8 million in profit. So not a bad haul. He also bought the March 27s as well, this trader, back on December 14th. So he picked up a ton of March vol back in December. He paid 70 cents for 5,700 of these calls back in December. He dumped them today for $1.20. So that's another 285,000 in his pocket. This guy put up about 2.1 million in the course of a month in this KBE name here. So not a bad little haul. This is a regional bank index, essentially. They track the regional banks. But he wasn't done there. He didn't just take his money and go home. He decided to double down, and he picked up 32,800 of the March 28s, paying 85 cents for about 12,800 of them, and he paid 70 cents for the rest. So he put out another 2.5 million worth of premium on these calls. This guy obviously loves this KBE index. It's done pretty well for him so far. I can't blame him for loving it. And so he decided to strike again and roll out to March and roll up his strikes, I should say, and just put on a sizable, ridiculously large upside position here in this KBE. I'm not sure if either of you guys follow this one. It's a pretty obscure name.
No, I've been following it, actually. It's interesting.
Really?
Yeah, well, I mean, it makes a lot of sense. Look at who's in that index. They're all, they're all the strong banks that came out of the financial crisis. Coming out of the financial crisis, we now have the big boys that are completely kind of handcuffed. And we have a ton of bank competition that's been that's been gobbled up and moved, and smaller banks that have gone out of business. And you've got these kind of big regional banks, your Fifth Thirds, your M&Ts, that are sitting there that are either going to be in a great position to increase market share, or like M&T bought, So it's real interesting. I think that there's a lot of upside to these regional banks. I really, I could see this thing going a lot higher. I think this index far exceeds XLF over the next year.
So in other words, that was you then buying those 33,000 calls. That was
that was part of
fund.
I only got filled on 25% of my order.
Oh, okay. The rest are still open for tomorrow.
Yeah. So.
But yeah, that's an interesting index. You always hear about XLF. You never really hear about this one. So I thought it was kind of interesting to bring up and show that there are some size bulls. At least one guy putting on size bullish positions out there in KBE. And we're going to finish up the odd block. Since we did two big names, we'll do a couple little quick hits. Mark, you mentioned RDN before Radian back in the trading block. And Radian, you're right, Radian did have a bit of a pop. Of course it did, because we closed out our position. So that means, of course, it's going to keep running up. We're watching those Radian Jan 9s again. And, of course, that's where someone came in and bought about 15,000 of those a few weeks ago for about 35 cents or so. And they got to about 55 cents yesterday. So you could have actually taken out a decent profit. They come back down since today. They're 35.45 as of the close. But still, you could, if you were one of those few who got the higher end of that spectrum when you bought them around 35, 40 cents, you still have a chance to close them out and actually make some money on the deal. So, of course, if you are one of these bulls, people keep rolling out. Oh, now the Jan 10s are offered at 15 cents, so they finally come to their senses. You could have actually, for a while there, and we tried to get it, and we couldn't get it off before the close yesterday, you could have sold that Jan 10 7.5 strangle for about 25, almost 30 cents.
That's
and
great.
There were actually bids. There were bids in those 7.5 puts, and people were buying those 10 calls for 20 cents inexplicably. So you could have really legged into a decent strangle.
I sold the 10 calls at 15 cents yesterday.
Did you?
Yeah. I put on the 9-10 call spread for 20 cents.
Oh, there you go.
I'm pretty pleased about it right now.
Yeah, that's a good one. I like that. You know, we closed out our position on the 9 calls. We were going to sell the 10s, but then we saw that strangle, so we thought we'd try for that one first, and then we didn't get filled on it, and then we just didn't have time to readjust for the end of the day. But then I came in today, I was looking at the market, and there were about 3,000 to go at 20 cents. So everyone had the same idea. Everyone wanted to dump those Jan 10s for 20 cents. So I knew if you had to get them, you had to get them at 15. So. But yeah, Radian's still very active. We saw another 1,200 of the Feb 10s going up today for between 35 and 45 cents. So this little name is not going anywhere. The bulls are still out in force, as witnessed by all those crazy people buying those Jan 10s for 20 cents. All right, I think that's going to close out the odd block. One quick one really quick. We did see another one come up on our screens today. Another little name we never really watched, but it's kind of interesting. Interpublic Group of Companies, IPG. They closed at about $10.59 unchanged. So what's interesting about this one is that this is a name that does no volume, a couple hundred contracts a day. And they did no volume again today, except for one guy came in and bought 4,500 of the July 16s for 60 cents. There's another one of these great names where it's just no volume, no open interest, no open interest, any strike, and then bam, 4,500. So one size bull coming in. It's not a stock replacement trade because you're not buying July deltas at the 16 strike to replace for stock. So yeah, this is some sizable upside bull in IPG, and yeah, obviously he thinks this is going up there because he's not getting out of these calls anytime soon. He's the only open interest on that strike. And with that, we will close out the odd block and we will roll right into the express/spread block.
The Spread Block. Brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
and welcome to the Express/Spread Block. This is the section of the show where we sit back and allow Rob to fill us in on the mysteries of life and also the mysteries of Options Express. So, Rob, what mysteries do you have to unveil for us today?
Well,
the mysteries of Options Express. Oh, that's great. Sorry, Rob, that was just the funniest thing.
So who actually does restock that candy dish?
Express is a mystery. Everyone must stand alone. I hear Rob call out spreads.
We may have a competitor for soundbite of Sebastian's soundbite of the day.
Okay. Yeah, we've seen that. Some people, we've had a lot of kind of order flow. People disappointed that Apple isn't really moving quite a bit, quite how they would expect it around the Consumer Electronics Show. But we have seen some smarter, kind of longer term traders realize that a lot of Apple's announcements they choose to kind of shun the CES show, and they usually have their own announcements usually a few weeks after the fact. I think that some traders are kind of repositioning themselves for longer term with Apple. While there's still some good premium left in these options during the CES show, trying to reposition for February. Historically, the company has always kind of waited on announcements, and I think that we probably won't see a Verizon iPhone announcement during the CES show. Apple's very kind of secretive and mysterious with how they choose to deal with their product rollouts, and I think that's something that we're kind of waiting on. And we've seen some interesting strategies as far as commodities. And one strategy I really do like with the commodity markets are your back spreads, your call and put back spreads that we've seen traders come in with. It gives you some of the benefits of a straddle with a bias. I mean, it doesn't really have a great risk-reward ratio if the market doesn't do anything. But we saw some 91, 93 crude oil callback spreads, which you were essentially getting paid $400 to get into the spread. If oil took off, went above 40 or 94.5. Your profits really started to move up, and if oil moved down to 91 on the downside, we saw you're going to get your initial premium of $400 you collected to get into the spread. Other than that, it's been really quiet on the equities front. With some of the commodities, again, it's been people that are a lot of the shorter term and higher frequency traders have actually really loved the markets the last few days because of the gyrations that we've had intraday.
On the first thing you said, the Apple tip, they do tend to do their own thing, and everyone and their mother, Bloomberg, you name it, was hinting for months at some big announcement at CES from Verizon on this. But, they tend to bring out the big dog, Steve Jobs, when they do those big announcements, and he sure as hell isn't coming to CES. So now the rumor is it's next week sometime, or maybe I think even they're saying the 11th, Apple's going to have their own announcement, and maybe that's what they'll announce, this mystical Verizon iPhone that is just getting rumored to death at this point. So that seems to be what's kind of keeping the stock in this holding pattern. Mark, what's going on with the vol out there? Is it coming off a bit now that things aren't unfolding the way people thought, or?
Yeah, I mean, I think it's not down to as cheap as it got when we were talking about a couple of weeks ago, but it settled back into kind of normal range. It got kind of oversold ahead of the holidays down to about, I want to say 25%. Since then has kind of rallied back to as high as about 35, and now is kind of eased back into more like 32%, which is kind of normal. February is a little more expensive because, or the Jan's going to be a little bit more expensive because of Apple earnings, which are supposedly the 18th. So I actually think that coming out of CES, even if that straddle gets a little compacted, we may see implied volatilities increase all next week and the following week, even if the straddle doesn't improve in price. We're going to see kind of what I call an earnings straddle situation develop, in which basically Apple straddles are not going to decay for a week and change. You're not really making money from the Vega, but you're not losing money from Theta. So that's what I'm looking at. I would note that straddle I suggested is winning by at least a couple of bucks. It's up 10%. So I would point that out.
There you go. So you'll be on vacation in the Cayman Islands for the next few months.
Well, no, I've got that huge KRE trade that I've got to finish up.
Oh, that's right. You still got about 20,000 of those to go.
Exactly.
You should call Rob. He can help you with that.
Mm-hmm.
Anyway, Rob, anything else going on over at Options Express these days?
It's actually been, again, really quiet on our product front. We are still in the process of testing out a new version of Extend. I think a lot of people, when it actually is finally ready for general consumption, are going to really like it. It's a lot more user friendly. It's maybe a little bit more intuitive for people that aren't necessarily very technically savvy. So we've done a lot with the user interface. I think it's going to be not only more visually appealing, but again the back end is going to be a lot nicer for if you're average customer.
All right, and with that interesting denouement, we will close out the Express/spread block.
The interview block.
And welcome to the interview block. This is the section of the show where we bring on, or should I say, drag some luminary of the options market kicking and screaming onto the program, and we force him to speak to our listeners and spill his guts about the options market. And today's unwilling victim is Steve Meisinger. He is the Director of Education over at the ISE. Steve, how are you doing today?
I'm doing great, Mark, and I'm more than happy to do this.
Oh, so that's a first then. That's nice. But Steve, since this is your first time on the program, why don't we start off with you giving our listeners a little bit of your background in the options business, and then let's dovetail into what the Director of Education does over at the ISE.
Great, Mark. So my experience is I was on 3 different floors, the actual physical trading floors of the Amex New York Stock Exchange and the PhilX over 2 decades, and I've been at the ISE for the last 9 years, working as in the last 5 or 6 years in options education. So teaching OIC classes, I'm an OIC instructor, talking about all the different strategies, risk and reward, and how the investors can use these strategies to best suit their needs. And that's as simple as it goes. I mean, really, I do the same thing at the ISE where I'll talk about webinars, I'll go out and teach seminars, and I also do the OIC write articles. It's always about what's happening in the options market and how can investors, traders protect themselves or leverage a potential position, try to look at all the different aspects, and they can figure out the best way to trade a certain market opinion.
And Steve, I imagine the bulk of your efforts these days are concentrated around the ISE's primary stable of products, including the FX options and the index options. So why don't you tell our listeners a little bit about those and what the ISE offers with those products?
Sure, Mark. So we have these currency options, and very interesting that you can, in a plain equity options account, trade your view of the dollar relative to the majors. So I get calls very often on how can I hedge my euro position. Somebody might have a business where they're receiving cash in euros, and of course the euro is quite weak in the last month or two, if you've been following it, down from 142 to roughly 130. And if someone is receiving euros and they're concerned that they might go lower, well, they can use the options market to buy puts to hedge. Of course, the euro can move up also. Tons of strategies that you can implement, just like trading an equity option. But again, now we're trading currencies. The vols are lower. But again, it all comes down to risk and reward. We also have ETF options that we're building on. We have a few new ones. We have some of the old ones. And again, it's always about trying to find a need for the investors. And then my job to teach the different strategies. So just to talk about whatever the product is, it might be currency options. It might be ETF options. One of my favorite ones is the natural gas FCG, where investors can have a pure play on natural gas, or it could be, as I say, simple Canadian dollar, euro, Japanese yen, Australian dollar, British pound, what have you. We have many of them, but euro is the most popular.
Steve, Mike Tusa here. You and I have worked together for many years, and one thing that I've always learned from you in listening to you speak and us just talking after events and that type of thing is you've always emphasized the importance of risk management in trading. Now, you've been in the business for you've been in the business for, as you always would make me say whenever I'd introduce you, less than 30 years, and I don't know how true that is anymore, but in terms of risk management, what are some ways with which you really held on trading all those times? Because surely in your years in the business, there had to have been some rough markets for you, even for a professional such as yourself.
Well, Mike, yes. I'm still under 30, although it's getting pretty close to that 30-year mark. But if I go back over the market crises over those periods, whether it was 1987, 1997, 2007, 2000, it seems like it happens every 10 years, although don't quote me on that. What's important? Well, it's always important to understand what might happen. A lot of times when I find that at beginning investors and even intermediate and even sometimes advanced people that are very sophisticated, they believe in models where they look and they say something is fairly certain, so they think it's a guarantee. And I think that those of us that have been in the markets for many, many years realize that there isn't any guarantees, and the options market gives all of us the ability to hedge some risk. We don't mind taking risk, but maybe we don't want unlimited risk, so options are a great tool to limit that risk. And that's really what I discuss, whether I'm talking about the simplest option strategies through the most complex, is try to look through the strategies and figure out why a strategy might not work. In fact, not only why it might not work, but a catastrophic situation where you might lose a substantial amount of money, and how can you hedge that exposure?
Yeah, I think that's very good that that's the message with which you convey. Just in looking at the euro currency on the ISE, the EUU, today it had a kind of a down day. We're actually down 1% in the euro. What are people trading right now a lot in the currencies? Are people focusing on the euro, the Aussie dollar, the pound, the real, or what do you see a lot of interest in these days in the currency world?
Well, it's funny, the way I look at the market, I look at the Australian dollar every morning because to me that defines risk. That's where the most growth is. At least many people believe that. But where the trading volume, it seems to be in the euro because of a couple different things. Number one, there are a lot of people that hate the U.S. dollar, and so they want to go to another currency that they feel obviously it's not in the U.S. dollar, so they'll look at the euro. That being said, we know that the European region has some tremendous risks, maybe just as many, if not more, than the United States. So we sort of oscillate between people trying to pile into the euro for a safe haven, although in 2010 it wasn't that at all. We had the Greek crisis. Now we're hearing rumors about Portugal, obviously Spain. We just had a bailout of Ireland months ago. So when these situations arise, while the options market reacts, volatility tend to move up during that period. right before, something might be announced. And as you said, we had a sizable move today, about 1.1%. And the volatilities are not moving as much as I would expect, although I guess the rest of the world, the options market, volatilities are pretty subdued, so that's also affecting the currency markets. You just never know. The way I look at the markets, you never would have thought that through the Greek crisis, when it was unfolding in late May, early June, we were going to see a bottom around 119. Then it rallied all the way back in early November to 142 in a piece, and now we're down already from 142 to 130. And I guess getting back to your question, what are people asking for? Well, took a number of calls today about hedging, and then this is what we all do: is that we see something might be trading at X, and all of a sudden if it's down let's say 10% of that, you might say, boy, I need to hedge. So I took a couple calls on that. The easiest way to hedge using this product is to look at the pair value. It's 130.05 currently. You multiply that by 100, it's a $13,000 product. So if you had to hedge, let's say $39,000, you would buy 3 puts if you were concerned about downside. Of course, if it was the reverse and you were concerned that the euro might rally, you'd buy 3 calls.
That's interesting. Now, with that, I know we were talking a couple weeks ago, and you were telling me that the ISC has taken an interest in the natural gas market, I hear. Can you tell us a little bit about that?
Yeah, sure. The symbol's FCG, and we at the ISC decided that there was a market opportunity to have an ETF that was not just a futures-based product where you have this roll that occurs. And so we created this product a couple of years ago that is based on the underlying equities. And it's been working out fairly well. It's called the First Trust ISE Revere Natural Gas Index. It's trading at 1965, down from, it's near an all-time high, but it bottomed out, as many stocks or ETFs did in August, around 14 in a piece. Volatility is pretty low, 23% as I speak. In fact, it is at almost the low point for the year, along with many, many other stocks. But it does give you a nice play on natural gas without the fear of the natural gas futures and the role that it would exist in other products. So in this case, you're long essentially you have an ETF where you're long the equities, and you don't have the increased slippage that you would have in a competing product. And the symbol there in the IC is FCG.
Now, Steve, one of the most common questions we receive whenever we do anything with the FX options on ISC, and one of the most common questions we get from our readers and our listeners of the show is how do they stack up against the Philly options, the world currency options? We've talked about that on the site a lot, and I've talked about it quite a bit. But now I'm going to give you your opportunity to come in and spell it out once and for all for our listeners, what the main differences are between your FX options and the world currency options, and why they might want to think of choosing the ISE ones over the Philly ones.
Well, they're very similar. They're cash-settled products. In fact, we started out years ago, Mark, where we had it being dollar-based, and then we listened to spot traders, people that are trading in or have some sort of business somewhere else, and said, they watch the spot market, so we now have our products are aligned with, not only do we have the dollar-based, but we also have the currency-based. So, for example, the euro, we have EUI, which is U.S. dollar euro. Now we have euro dollar. I believe Phillips has the same product. So we think at the IC that our differentiation is education, that there is somebody that can answer. I'm basically answering FX questions all day long, and enlightening people to understand what it really means. What kind of hedge would you need on a certain position, and what does that mean as far as cash settlement? When does it end? Expiration is a little bit different. 12 o'clock, noon. Using the IC product. We think that is a difference. If you look at the bid-ask spreads, I think they're pretty similar. We're pretty proud of the markets that are being disseminated. Let's say right now I'm looking at the Feb 130 call and put, and they went out 8 cents wide. That's not a bad market at all. I don't know what the Philly's offering or what they offered at the end of the day, but again, we think it's really about education and our market makers, more than likely, I would guess that the same market makers that are here are in Philly. So the products are very, very similar. A lot of it, most of it, has come down with education, and we are at the forefront of education.
Well, Steve, I'm glad we could finally get you on the show. I'm glad Mike could wrangle you for us. I know we've talked about having you on for a while, so I'm glad we can finally get you on, and we could probably chat about these products for quite a while, but we do have to move on with the rest of our show. So I want to thank you for coming on, and we'll definitely have to have you on again down the road. Maybe you can sit in for a longer session of the show and chime in on the trading block and some of our other segments as well.
Mike, thank you so much for having me. Really appreciated spending the time with you guys, and we'd love to come back real soon.
Thanks, Steve.
Thanks, Steve.
Take care, guys.
Around the block.
And welcome to Around the Block. This is the segment of the show where we discuss what's on the horizon for the next few sessions, both from a macro and a micro perspective. Everyone here seems to be loving Apple and long Apple, so I imagine a lot of you guys are still watching Apple Vol, and maybe you're at Tucson. You still long those spreads, or did you close them out?
Still long for now. We're watching it close though. If it starts coming down anymore, we're not going to be too gun shy on getting out of them.
Yeah, you've had a decent run. You've been around the block long enough to know never to bemoan taking a profit.
Yeah, try not to let a winning trade turn into a losing trade. So, but pretty much, so long as it doesn't gap, that won't happen.
Yeah, I don't see, unless there's some crazy, fantastic announcement coming out from a competitor. I don't see them gapping down too hard anytime soon. And I know on the economic calendar we have non-farm coming up tomorrow. I'm not sure how enormous of a mover that is. It hasn't really moved us that much lately, but that's kind of the one big number on the horizon for tomorrow.
Mm-hmm. Yeah, the way I'm seeing things, I'll tell you what has been the trade of the week has been the short time spread in the S&P 500. That over the last week has just been such a great trade. And, not a huge winner, but you've been able to trade in and out of that thing in between $12 and $13 all week, and there's been some gamma scalping opportunities. And January has just been so overly depressed, leading and compressed and repressed, and every other kind of est that can be said about January. Relative to Feb, I'm not making a comment about vol in general, okay? What I'm saying is that the relationship between January and February is wrong, or is January is too expensive relative to February, and that's something that needs to be or January is too cheap relative to February, and that's something that needs to be worked on. So. There you go.
Does that spread come in a bit then, or?
Yeah, it's trading. It popped. I saw it trade as high as 13.25. I saw it trade as low as about 11.75. I think it closed at about 12.25 today.
Interesting. Yeah, and you get some gamma. We're not moving too much, but you're moving around a little bit. If you scalp it aggressively, you can do all right.
Mm-hmm. Couldn't agree.
And so yeah, Mike and Rob, what are you guys eyeing for the next couple sessions?
Like everyone, we're watching. We're going to be by the computer tomorrow morning at 7:30. But for the most part, it's been not a lot happening that we're uberly aggressive on. We did get into Cisco, so what I need now is for Sebastian to start singing the Cisco Kid by War. If you could do that for me, please.
War! No, that's a different song, actually.
Dancing like the Cisco Kid? Oh, wow. I stumped the human jukebox.
You did. You stumped the human jukebox on that one. Wow.
Wow. But nonetheless, we did short some puts on Cisco for some of our clients, and we shorted the February's. Earnings are coming out on February 8th with Cisco, and it's one to where even if it goes down, we're more than happy to own Cisco at 20, possibly initiate a collar, sell some covered calls, something along those lines. We feel it's a good fundamental stock, and that's probably the biggest news coming out of Know Your Options this week in the transaction world.
Did you leg into maybe the short-term stuff, the weeklies, or did you go maybe Feb or a little bit farther out to
February, we went to February. I was debating between January and February, but I kind of ran into the same thing that Mark was just talking about. The vol in February just was a lot more attractive. Now, granted, there's an earnings announcement for Cisco coming out February 8th, so that could have something to do with it because it wasn't in the January expiration cycle. But nonetheless, this is a stock that we like for the long term, and we'd be more than happy to own it at 20.
But yeah, you're right. I'm looking at these 20s in Jan and Feb, the puts, and not much going on in January. I think you'd be worth doing any sort of short put strategy out in the Jan 20s. Not much bang for your buck there.
Yeah, that's what we were thinking.
I think with that, we're going to close out this episode of the Option Block. I want to thank all of my cohorts in crime here for coming on the show, starting out with Mr. Kurzakowski from Options Express. What do you guys have anything interesting going? I know you have that show in Dallas. Is that coming up in a couple of weeks, or is that in a month or two? When's that coming up?
The Dallas show.
I'm going to be there. Are you going to be there?
Fortunately, I'm not going to be there. I don't. They don't like me traveling around. So
I can understand
I scare the customers. We have that coming up in, as far as what we're looking at here. I think next week is a nice report heavy week. We're going to have some. We're going to have the CPI, PPI come out for the commodity traders. Maybe we'll get some more insight there and see if we can get the metals to move to the upside a little bit if we get some inflationary numbers, and just a very back end loaded week next week with retail sales and Michigan sentiment coming out. So I think we're seeing a lot of we'll probably see some quiet trading early next week, and then have some more activity as the week progresses.
And then, Mr. T, what is on the agenda over at Know Your Options, Inc. for this week?
Over at what we have on Monday night, we're doing a webinar on calendars and diagonals. I think it would be, with the volatility relationships, I think that would be pretty interesting to come and attend. If you're interested, go to knowyouroptionsinc.com.
And don't forget the direct TUSA 800 line that we put out there last week. What was that number again?
866-903-1822. Feel free to call anytime.
And just ask for the option block discount, and Mike will set you up right there. Or ask for the secret option block vertical 1:2 ratio spread, and he'll put you into that one.
Ooh.
That's exclusive only for option block listeners. And then we're going to close things up. Mr. Sebastian, what do you have going on over at optionpit.com?
You know, we've got this, I think you probably heard the commercial for it today, this pre-mentoring course that we're going to be coming out with that's going to give you all the skills you need to be able to enter a mentoring program so that you can trade for yourself, or if you choose not to be really competent and able to have a good conversation with a guy like Mike Tusa or a Rob Kurzakowski when they're when they're either offering advice or offering counsel on your portfolio stocks. So I think it's a really neat thing. I'm going to be in Dallas at the OX conference on February 5th. So if you're in the Dallas-Fort Worth area, come out and see me. You can put an ugly face to this grating voice, and it'll be a lot of fun. So, obviously that's not true. I'm handsome and my voice isn't irritating. So, don't worry about that.
Yeah, one thing that I'd like to add to that, if you are in Dallas, the OX events are great. Joe Cusick and the education department, they do a great job with putting them together, and they always have a lot of talent there, and the best, it's a great time. You get to talk with fellow traders, and I couldn't recommend that enough. And in terms of like the ugly face, I've seen you, Mark. I got to agree with you. So.
Oh, come on.
But the education is second to none from Sebastian, you know?
Thought you were going another way there. I like it. I like the turn, Tusa.
Yeah.
Turn dark. I like it.
I know.
All right. And, of course, if you want to hear more about the unusual activity or any of the news or other breaking developments we talked about from the options market on the show today, then surf on over to theoptionsinsider.com. I want to thank all of our listeners for listening and subscribing and downloading this show, and we'll see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.